Welcome to this explainer. Today, we're unpacking a fascinating case study that literally flips traditional investing advice completely on its head. Usually all the financial chatter is obsessed with what to buy, when to buy it, and how to maximize returns yesterday. But today we're looking at an absolute masterclass in hitting the brakes. We're going to explore a real-world scenario where a financial advisor looked at a massive pile of cash just begging to be invested and did the unthinkable. They looked the client in the eye and said, "No, wait."
So let's talk about this massive number, 5 crore rupees. That's 50 million rupees. A client walks through the doors having just sold a piece of family land, and he's got exactly this amount sitting right there in his bank account, totally liquid and ready to deploy. Now, for anyone in wealth management, this is the ultimate dream scenario, right? It's a massive influx of capital. But the way this actually played out, well, that's what makes this such a crucial lesson in true wealth architecture. Naturally, the client was chomping at the bit. He wanted to dump almost all of that cash into the market that exact same week. He had the funds, he was ready to roll. And yet, the advisor told him to stop. Which sets up the central mystery we're figuring out today. Why on earth would a professional advisor turn away a 5 crore rupee investment sitting right there on the table?
To the client, this opportunity looked completely flawless. All the boxes were checked. He had the capital, a high-risk appetite, and this huge list of hot recommendations from friends and family. He basically felt invincible. But the advisor wasn't looking at the market. They were looking at the client's foundation, and man, they saw some glaring red flags. We're talking no safety net, no estate plan, and a totally fragmented portfolio.
It's like looking at the complete blueprint of an unmade investment. It highlights exactly what the advisor saw when he looked past all those dollar signs. So to really understand why this massive pile of money was put on ice, we need to dive into 3 hidden financial traps this client was about to step right into. And honestly, these are super common blind spots when people suddenly come into wealth.
Let's start with trap number 1, no emergency fund. Okay, so this is arguably the most fundamental rule of personal finance, and it was entirely missing. The client's day-to-day life depended completely on his monthly salary. It paid for literally everything: the EMIs, the school fees, the daily groceries. Ironically, despite having 5 crore in the bank, his cash flow meant he was essentially living paycheck to paycheck. If his income stopped for even a few months, he'd be backed into a corner and forced to prematurely break those brand new investments just to keep the lights on. And as we all know, forced liquidation usually means you're selling at the absolute worst possible time.
Moving right along to trap number 2, no estate plan.
This is a massive, massive red flag, and it's all about protecting the family if the unthinkable happens. This client had 0 legal will established. Nothing. No clear nominees updated across his accounts either. By rushing to dump 5 crore into the market without doing this basic paperwork, he was basically setting a ticking time bomb. If tragedy struck, this windfall could take his grieving family years, literally years, to access. It would be entirely tied up in legal battles and red tape simply because the foundational paperwork wasn't done first.
And that brings us to trap number 3, no tax or portfolio review.
This one reveals a huge blind spot when it comes to sudden wealth, which is failing to look at the big picture. See, the client didn't have a blank slate. He actually had a really fragmented, messy financial life already. Insurance policies, mutual funds, fixed deposits, all chosen separately, pushed by different people at completely different times. It was like a financial junk drawer. Injecting another 5 crore into this tangled web without figuring out the tax implications first, that would just throw gasoline on the fire. It wouldn't be a cohesive portfolio, it would just be a random pile of products.
And this is exactly where the true value of an advisor shines. Instead of just nodding along and grabbing a quick, massive commission, the advisor initiated a hard stop. They just looked at him and said, "So we're going to pause."
They laid out a precise roadmap of what had to happen before a single rupee touched the market. Step 1. Build that emergency fund, which instantly kills the risk of forced liquidation. Step 2, sort out the will and nominations, making sure the family is fully protected. And Step 3, map out the total tax impact to bring some actual order to all those fragmented assets. Doing this ensured his financial foundation was absolutely bulletproof.
It was only after those 3 structural pillars were locked in place that they even started talking about investing the remaining capital. You see, true wealth management isn't just about chasing the highest returns or jumping on the latest hot stock. It's really about securing the perimeter before you build the house. Because if you don't have emergency cash, you don't have a will, and your tax situation is a mess, well, even a 5 crore house is eventually going to sink right into the mud.
As we wrap up this explainer, I really want to leave you with a powerful philosophy that drove this whole approach. The best investment is sometimes the one you don't make. Or actually, let's call it the one you delay until you're genuinely ready for it. This whole case study is proof that real financial discipline is about having the maturity to organize your life before you try to grow your wealth.
We get so caught up in the thrill of the market that we totally forget the boring, essential structural stuff. So I'll leave you with this question. If you suddenly received a massive windfall tomorrow, is your financial house structurally sound enough to handle it? Or would it just amplify all your existing blind spots? Really think about it. If you want to make sure your foundation is rock solid, go ahead and follow the prompt on screen. Comment structure for a free portfolio review. Thanks so much for joining me on this explainer, and I will see you next time as we decode more essential insights.